Hello everyone and welcome to the NinjaTrader Ecosystem Webinar Room. My name is Tiffany Sampson and I work for NinjaTrader in our Denver office. We have a very special event for you today with Paul of Trade the Fifth. I'd like to mention that it is important to understand that there are substantial risks in trading commodity future contracts in Forex. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with your broker, and you can even incur losses beyond these amounts. Please inquire at the link provided for more information or for the copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation nor recommendation, but simply educational in nature. This presentation is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage directly at the information provided. With new tools added nearly every day, NinjaTrader Ecosystem is home to hundreds of apps and services. You can quickly and easily find the tools or services you're looking for with a simple keyword search. You'll also find information about upcoming webinars and an on-demand video archive at the following recordings. Also, if you are active on social media, please ensure to like or follow us for the best way to get updates on all things NinjaTrader Ecosystem. NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure that you are on the latest version of NinjaTrader and pick up a free live data trial, please visit the following link. You can purchase or lease NinjaTrader at the following link. And if you are just getting started with NinjaTrader, we offer free live training on a daily basis. You can view a schedule of weekly webinars at the following link. We are very excited for this unique event in which Paul will demonstrate simple and repeatable trading strategies for part-time and full-time traders. Thanks again for your attendance today, and without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Paul. Take it away, Paul.
Okay, let's get going. So, wanted to learn trade. Okay, that's good. Let's get going. Okay, what I want to talk about first is trend, what it's all about, and basically how we're going to measure that and how our software can help you do that. Yeah, probably turn down your volume a little bit. You know, I've turned it up. I'm coming all the way from Spain, guys. I've got to make sure it's loud enough to get over there, you see. So what is a trend? Trend is simply herd mentality. So herd mentality describes a behavior in which people act the same way or adopt similar behaviors as the people around them, often ignoring their own feelings in the process, okay? That's the official version of herd mentality. So you probably had a parent or a teacher ask you, if your friends jumped off a cliff, would you do it too? Of course not. You know, that's insane. You're just a strong, independent, free thinker. Why would you do that? However, people do it. People do follow other people. So, but what if your friends weren't jumping off a cliff? Instead, they were all buying shares in the latest tech stock. And I don't class Uber in there, by the way. You know, every day you see the price going up a little, your friends are talking about it, how great the tech company is. After a while, it's not so much of a question as if you're going to buy shares in this tech stock, but when you're going to buy shares. Antoine, you should get sound. Everybody else is hearing me. So how does this help with a trading strategy, you may ask? So the reality is that our friends buying stocks isn't really going to move the price at all. So that same herd mentality holds true for institutional traders when trading stocks, Forex and futures, as they are human beings after all. So even the algos were programmed by human beings. So what, you may ask? Let's have a look at trend behavior. So for the bulls, when an institutional trader sees value in a stock, and we're just going to use stocks as an example here, but it's pretty much the same everywhere else, where he buys a sizable amount of shares in that stock, other traders start to take note and after similar analysis start to buy, which makes the price start to move up. I'm British and proud of it, even though I don't live in England anymore and I've got residency in Spain. So as momentum grows and more traders don't want to be left out, the price starts to trend up higher. So this doesn't last forever, as those human institutional traders who got in early want to take profits at some stage. They've got bonuses after all, mortgages, second mortgages and all that sort of thing. So for the bears, when some of the early buyers start to take some of their positions off to take profit, so do some of the other institutional traders to cover any major sell-offs and to bank some of those profits as well. So at a certain price point, those traders that got in the herd move later on find themselves at a price lower than their original entry price now. So this is big decision time. So it's that critical time in a trend behavior. After that profit taking, this is that critical time. So we call it the pullback. If those traders in a slight loss-making position still see strong growth potential in the stock, they buy more shares at a lower price, thus lowering their average holding price of that stock. Other traders see this bullish volume and see this pullback as an opportunity to get in that bull herd. Trend failure though, not every pullback actually holds. We do get trend failures. So if those traders in slight loss-making positions start to panic, there's a Trump tweet out that's not looking too good for tariffs or for economy or whatever, they start to panic, and that's when the selling volume increases. They sell their positions to reduce the risk and loss. Some of the early entry traders see this high bearish volume continue and decide to close the rest of their positions and take the remaining profit. So lots more traders then sell and join that bear herd, and you get that failure, okay? You get the trend failure. So what does a trend look like on a chart? So at the bottom left of the chart there, you can see a really narrow range bound period there, very, very narrow range. This is a daily time frame, for examples. Every single candle is a day. It's not really moving. You can see the low average volume as well on that left there. Then you get a breakout of that range. You'll see that increase in volume as well, and you get that initial impulse move up, okay? Then you get some slight profit taking as the volume comes down as well during that. And then you'll see at the bottom of that, the pivot is very, very crucial. Anybody tell me what type of candlestick that is, okay, in the blue? Come on, anybody? Hammerhead. It's a rejection. That's right, guys. John, Todd, Neil, well done. So it's a hammerhead. It's a rejection of those lows, and look at the volume, on high volume. That's a good pivot point. So at that point, when we talked about that herd mentality, those people saw value in there and started adding to their positions, and that bullish volume rejected those lows and start to move back up again, okay? So then we get another impulse leg, and you see how that volume starts to increase upon that impulse leg again as well. And overall, it's a longer leg this time. It's a longer impulse leg. You've got some bigger candles. You've got bigger average volume building there. But then you get some profit taking again, okay? You get some more profit taking, more pullback, but as that pullback happens, that volume starts to teeter off again. Now look at that candlestick pattern there. 2 candlestick pattern. Anybody tell me what that is? Correct. Jean, doji, that red doji with the green bullish engulfing. Bullish. It's not exactly a bullish harami, but it's a bullish engulfing, okay? Look at the volume as well. A lot higher volume at that pivot point as well. So when we have that profit taking, traders see value, institutional traders see value. We can't move those markets, but institutional traders can. They see value, lots more bullish volume coming in there, lots more volume altogether. We get that engulfing, and then we get the next leg up of that move. You see how it just beats that previous pivot and runs out of juice at that high there. So what if we could measure this behavior in a consistent way? So don't be afraid. I'm going to mention something technical here, but what I've done is the way I've used Elliott Wave over the last 15 years is I've dumbed it down because I'm English. I don't like to look too clever. I don't want complicated things in my life, and I try and make it simple. So we can use basic Elliott Wave rules and observations to measure and track a trend progress. So let's go through that. So how do we measure that trend? So you've got to keep it simple for a start. Don't overthink. Don't put loads of different Bollinger Bands and EMAs and all that sort of thing. Keep it simple. What's happening in the trend? What is the behavior? So we look at 3 basic Elliott Wave rules. With us, we look at 3 basic observations of behavior for measuring a trend with Elliott Waves. And we put it together to form a simple and repeatable strategy to trade the 5th and final wave of a trend, okay? We're not looking at 8 wave structures, we're not overcomplicating, we're not looking at inner waves, we're just looking at 3 basic Elliott Wave rules, 3 basic observations of behavior, and we put it together and we trade that 5th wave. That's why we call TradeThe5th.com, because it's the highest probability move in an Elliott Wave sequence. And that's why we trade the 5th wave, because all of the rules and observations have been met during the trend. So, trend rules. You cannot break these 3 rules, okay? You've probably seen them all before, but we're going to go through them again, okay? So the first rule is the wave 2 must not retrace further than the origin of wave 1. So we got this low here, we got this initial impulse leg up, that's the wave 1, and then the wave 2 comes back shallower, higher support level there. So wave 2 must not retrace further than the origin of wave 1. The wave 3 cannot be the shortest of the 3 impulse waves, okay? So the first impulse wave is wave 1, the second is wave 3, and the third is wave 5. It cannot be the shortest, okay? And the final and the third rule that we look at is the wave 4 must not pull back beyond the wave 1 extreme. So when you see this big profit taking wave 4 pullback, it cannot go back beyond this wave 1 pivot point here. As long as it doesn't come back there, that's an initial, that rule is kept, okay? Benjamin, you may have to restart and check your sound settings. I think everybody else can hear me okay. So there's the 3 rules that cannot be broken, okay? And they are some of the basic rules that we use to program the algorithms in our software. So now we look at the observations. So when swing trading, the wave 4 pullback has to be in the 3 zones that give probabilities of a new wave 5 high, okay? So we've had a wave 3. The 3 probability zones that we look at is, the first is the green zone. So if the wave 4 comes back into that green zone, there's between there's an 85% probability it's going to go on and hit that new wave 5 high. If the wave 4 pulls back into the amber zone, it's an 80% probability it's going to go on and make that new wave 5 high. And then finally, if it pulls back into that red zone, and the bottom of that red zone is the 0.618 retracement, there's a 75% probability it's going to go on and make a new wave 5 high. If it goes beyond that 0.618 retracement, our red zone on our indicator suite, it is just like rolling the dice. It's gone too deep. And it's that trend behavior where we talked about the difference between it regaining that trend, or actually panic starts to set in and selling starts to go and the trend fails. So if it goes beyond there, we're looking potentially at a trend failure. And to be honest, sometimes when I'm day trading, I look for wave 4 failures and I trade them if you're in a bullish trend and you get a wave 4 failure, that failure happens really quickly, and there's some really good trades there. So observation 2, when swing trading, the wave 4 pullbacks between 90 and 140% of the highest point of the wave 3 on a 535 oscillator. So we're going to go through this on the chart, but in essence, this is the highest point on the oscillator during the wave 3. And then it starts to run out of juice, and then we have the wave 4 pullback, and as you can see in red here, it's between 90 and 140% of the highest point on that wave 4. That's an observation. That's a good. If that wave 4 finds support in that amber zone, for example, you get observation 2 hitting between 90 and 140%, you're starting to build a really good picture of a strong potential 5th wave trade. The next observation, the wave 4, so if we've got when the oscillator pulls back on a wave 4, you'll get the stochastic pullback and crossover in the oversold zone. Now we've got yellow dots or lines on the top in this instance. That denotes, this is our false breakout stochastic, so this denotes a really strong bullish trend. So when the stochastic pulls back against there and crosses over in the oversold zone, and that's 20%, not 25, I'm British, I'm conservative, I make sure it does that extra little bit, then we've got a really good potential trade. So you've got all those 3 rules they've been met. You've got the observation, so that pullback zone's been found support, the 535s between 90 and 140, the stochastics crossed over in that oversold zone against those false breakout bars. So if you imagine the stochastic like elastic band, those false breakout bars denote a really strong bullish trend. When it pulls back in the oversold zone, it's like an elastic band. It wants to return to that main bullish trend. So you've got all your ducks in a row, if you like, looking really good for potential trade. So you've got to put it all together. You've got a checklist to follow, when setting up, if you like, those 5th wave moves for long or short. So all must be ticked to give green light for that entry strategy. And again, as a trader, and the people I teach or my inner circle and all the training courses I do, as a trader, you are there to find reasons not to get in a trade. If all of your checklist is ticked and everything looks good, there is no reason not to get in that trade. If one of them is failing, then there's a reason not to get in that trade. So the wave 2 must not retrace further than the origin of wave 1. The wave 3 cannot be the shortest. The wave 4 must not pull back beyond the wave 1 extreme. Wave 4 pull back into either one of the 3 probability zones. The 535 pulling back between 90 and 140% on the wave 4. Stochastic pulling back against the main trend and crossing in the overbought zone for shorts and the oversold zone for longs. And they're all a tick in the box. So we're looking good at this point, okay? Still not over yet. keep out. So the important part, we need a simple repeatable entry strategy with a minimum risk to reward. So we've got the picture, we understand the trend behavior. You got on our indicator suite, you don't have to worry about those 3 rules. We do it for you and we print the waves, okay? And you'll see that on the chart soon. So we've got all the ticks in the box. We understand the trend behavior. There's a potential wave 5 going. Now we need to get a entry strategy that's going to work for us with a good risk reward. So in our indicator suite, we have a 6-4 moving average high, which is this green moving average here. And we have a 6-4 moving average low, which is for short entry there as well. So in this one here, we've had a wave 4 pullback. It's come into the amber zone, starts to move away. From there, our entry is above the 6-4 moving average high. So that's one of our conservative entry strategies. The next, we can see a short, exactly the same thing. Wave 4 comes up into the green zone, finds resistance, starts to come back down. We look for the 6-4 moving average low, but it also look for that support level just around here as well. Got to be sensible here. You don't want to press the trigger too early when you're just going into some support. So again, you've got 6-4 moving average high for long entries and the 6-4 moving average low for short entries. Again, I'm going through this quite quickly. This is part of our core trading strategy course on TradeTheFifth.com. But this is a lot longer course and I just need to go through the basics right now and get onto the charts for you. So entry strategies, final ingredients, stop loss slightly beyond the wave 4 pivot, target zone between 120 and 140% of the fib, extension of the wave 3 pivot and the wave 4 pivot. Again, we've automated that now, automated target zone in there. Minimum risk to reward of 1 to 1.6, and we'll go through that in a second. So simple 6-4 moving average entry long. So we look at this, we've got a wave 4 pullback into our amber zone, find support here. Well, that's a bullish Arami with an indecision doji there. Stochastics pull back against this false breakout bar, crossed over in the oversold zone. The 535s between 90 and 140. Entry strategy above the 6-4 moving average high. So everything looks good. Stop loss is just below the wave 4. Entry again is just above the 6-4 moving average high. And we're going long. Okay, so let's look at that in more detail. So we're risking 1 for a reward of over 2 there. So risk reward minimum of 1 to 1.6 is met there as well. Okay, so this is just an exploded view of that same chart. So we risk $100 to win $200 or $1,000 to win $2,000 in this instance. So our minimum risk to reward of 1 to 1.6 with our conservative entry strategy to our automated target zone up here in blue is over the 1 to 1.6. So we've got all of those rules met, all those observations met, we've got a good risk reward, sensible entry strategy, got to press go. %, of the trading account balance if I'm swing trading stocks for a reward of over 2%. So same for the shorts again. So we look at the wave 4 pullbacks, found resistance in the green zone. The 535 is between 90 and 140. The stochastic has the false breakout bars on the bottom. It pulls back against there, crosses over in the overbought zone. All things are looking good. Entry strategy, very conservative below this support level here. And then the stop loss just above the wave 4. That gives us a risk reward of 1 to 1.6 into the target zone. Our rule has been met for our simple and repeatable entry strategy. We've got a sensible entry, we've got a great risk reward of 1 to 1.6. Again, we're just going to look at a close-up of that. So entry, stop loss Target zone down at the bottom, you see the risk reward there, 1 to 1.6. Really, really simple. And again, just to reiterate, it's not set in stone. You have to go directly out of this 6-4 moving average low. If you've got, during this wave 4, a good support level there, you've got to make sure you're below that, or vice versa for longs. So the strategy is now complete. Without a minimum of 1 to 1.6 risk to reward, the trade is no good. Okay, so you've done all that work, your risk reward isn't good enough, you walk away. You've got to have the discipline to walk away. There's lots of trades out there, you've just got to wait. So again, to remind you, the wave 2 must not retrace further than the origin of wave 1. The wave 3 cannot be the shortest. The wave 4 must not pull back beyond the wave 1 extreme. Wave 4 pull back into one of the 3 probability zones. I keep repeating these guys, but you have to repeat it to yourself. You've got to go through your checklist when you're setting up a trade. 535 oscillator between 90 and 140. Stochastic pulling back against the main trend and crossing in the overbought zone for shorts and oversold zone for longs. Risk reward greater than 1 to 1.6. Everything ticking a box, you've got to go for it. Okay, so that's there. Any time frame, ticks, ranges, anything, yes. So what I'm going to do now, I'm going to go to my screen and hopefully you can see gold on the 5 minute setting up on the futures for a potential 5th wave short. To be honest, you've got to be looking for an entry about down here, but the session's closed now. It's going to be a long, long night for gold. But I just wanted to show you this. I've been looking at this for a while. I'll just extend this now. Okay, there we go. So, yeah, Forex as well. We'll look at that in a second. So this is gold futures on the 5 minute. We've been going down all day because indexes have been going up. I'm going to show you ES in a minute. So we've had the wave 3. The wave 4 has found resistance in the amber zone. Okay, yeah, this is the 5 minute time frame. So look at that doji right at the top on that wave 4, rejection of that, rejection of those highs, and now we are venturing back. 535 is between 90 and 140, false breakout dots on the bottom, stochastics pulled back, crossed over in the overbought zone, and now it's coming back down. Wave 3 can never be the shortest. It's been working for me for 15 years. So the wave 4 is the wave 3 is the longest here. Okay, we've got a wave 4 pullback. We've got a 1525 potential target zone there. So what we're going to do is I'm just going to put my risk reward on there. So I'm going to use the fib extensions. I'm going to put the stop loss just above the wave 4 here. My entry is going to be below this support level there. Again, overnight trading is always a little bit risky, so I'm going to make sure I'm below 1534 for my entry there, just to be on the safe side. See what the risk reward is. So this is NEM, another one on my swing trading membership. Took the profit yesterday, around about $41, hit the 5th wave target zone there. Entered this one pretty conservatively, but we got a good move. So TSS, another one that we're in right now, wave 4 pullback, stochastic good, oscillator good, and we're in this trade. We've only been in it, 1, 2, 3, 4, 5, 6, 7, 8 days on the daily time frame, looking good. One that we're not in yet, but we are setting up is MLHR. Okay, I've isolated the wave count down here. We've had the 1, the 2, we've had earnings with a big jump on the wave 3, gone all over the place. But one thing I wanted to show you on this one is you can isolate the wave count wherever you want to be. Okay, So I can literally left click, press F5, as you can see there. As you can see, we're still in that wave 4 right now, okay? Doesn't matter where you do it, this long move is where we are right now, and that's what's important, and this is what we're looking for that entry. So if I go back to futures now, I'm going to go to ES. Oh no, that's the bits. I'm going to show you that in a minute. So ES has been, it had a big parabolic move today, really, really big. This was during the European session. We opened around about here. I can isolate the wave counts here, there, everywhere you see. But mainly, this is where these lows, that's what I'm interested in overnight. And some of the guys that are our users already, they recently asked, do you look at those 24-hour sessions? And I do, because you need to understand where the trend started on these futures for the day. Okay, and they've started during the Asian session. We started to move up. European session open, massive parabolic move, huge move, and just continued to move up during the day. We've had a slight pullback now, you know, towards the end of the session, no real trades there. And then when you look conversely, you look at gold, you look at gold then has gone down all day as ES has gone up, and there's been some great trades there, and we're just waiting for those fifth wave moves to occur. Everybody hear me? Somebody asked about currencies, Forex, okay? So this is the 60-minute time frame on GBP US dollar. Can you see this chart? Say yes, Paul. Okay, so this was 23rd of August. We had a wave 4 pullback into the amber zone. Look at that indecision doji there, really, really cool. Look at the 535, that's between 90 and 140. Stochastic crossed over. Fifth wave hit to the T and then bounced off back again, okay? So 60-minute time frame, Forex, we've looked at stocks on the daily time frame. We've looked at futures on the 5-minute time frame. Anybody want me to look at anything right now? Stocks, futures, Forex, what time frame? Shout out, I won't be able to do them all, but I can certainly have a quick look at them now and see what's going off. NQ 30 minutes. Okay, so let's go to futures. Let's go to NQ. We'll go 30 minutes. I'm just going to include, I want to put 60 days on there. Click apply. Okay, so I want to isolate these lows here. Ooh, it's looking ugly. I don't like this range. This double bottom here for me is where we isolate. Okay, because if I just draw this in, again, I'm not perfect with these drawings. This here is a double bottom. This is not a trend. Remember, Elliott Wave is for trends, okay? So this low here, you would think is where to isolate, but actually, we've got a double bottom here. This is where we isolate. 1, 2, 3, 4. Huge rejection today. And this is where we are right now. So 7750 is roughly where the fifth wave target is on NQ on the 30 minutes. Okay. Yeah, really, really strong NQ. I've been trading NQ a lot just recently, actually. So CL, let's have a look at oil. What time frame on oil? Crude 5 minutes. So we'll go to there. Excuse me, just get some water. Okay, we want 5 minutes. Where are we? Overnight session, lows. Let's isolate here. It's been a bit choppy today, hasn't it, guys? Been a bit choppy today. Really choppy today. Actually, I would have a look at that on the bits. This is our breakout intelligent trading signals software. Bits it's called. This is ES on the 5 minute. These were the signals today going along. I'm going to look at oil now to see if there's any decent signals on oil on there. Where are we? It's been all over the place today, hasn't it, oil? Signal coming up now, 56.65 for a breakout. We're going into Asia though, so now oil's not tradable, wasn't tradable today. Very choppy. So before we go on, guys, I'm going to go on with the rest of the charts. Can you see the website there? Okay. What I'm going to do is I'm going to give you this link. We only do annual licenses for our Elliott Wave and our bits indicator. However, if you purchase it now, okay, it's $499 a year. You will get it for $499 for life. Okay? I'm going to put that in there right now. Okay, so you can, the Elliott Wave indicator and the bits indicator is on there. And we're doing a special offer for the next 24 hours. You can get it for $499 for a lifetime license. We have changed it. Now everything is on an annual license for $499. You will have to use this code forever when you email. So when you purchase it, you will get the indicator suite. You will then have to email Damien to activate your machine ID. Okay, when you do that, in the email, use forever, the number 4 and ever, and he will give you a lifetime license instead of an annual license. And that is for the next 24 hours. Okay? Okay, Rick, probability zone prints when you've pulled back for, when you've had a wave 3. So we've got to find an example. This will be fun. Let me think. AIG maybe. So let me isolate down the bottom. Okay, so this is just an example on AIG on the daily time frame. So once the wave 3 has posted, it comes back a certain percentage. These are fixed, these zones. Okay, as long as you don't get a new wave 3 high, these zones are printed when we get a wave 3 print. Okay, and then obviously that is fixed. You get the price action come down and it goes to where it wants to go. Okay. Yeah, the wave numbers appear on the chart where, you know, you can literally, if you just isolate, you can see there I've isolated at these highs. We've had a wave 4 pullback here on AIG. We had a short into the 5th wave target zone. We've had a wave 4 pullback, 5th wave, then a long move up. Now we've had a wave 4 pullback. So they do print on the screen and they are live. As the rules change or broken or met, those wave counts will be printed. Now, obviously the markets are closed right now, but let's just see if we can do it on a 1 minute chart on gold, for example. So let's go 1 minute. And again, it's going to be light volume right now. So I'm going to go from these lows. Okay, as you can see on the 1 minute now from these lows, we've had a wave 4 pullback. Potentially got a 5th wave move on the 1 minute, and again it just prints. If this goes above that wave 3, it will print the 5th wave target zone. Ruben, it works with NinjaTrader, NT8, obviously, and on the website you will see the other platforms that it works for as well. Okay, but this is NinjaTrader webinar, so I'm basically concentrating on the NinjaTrader platform, NinjaTrader NT8, but we do it for other platforms. Okay, is anybody, let me just go back a second, see what, silver futures, give me the ticker, something I don't, ES Globex, Rusty, you've got to understand how the trend it starts or ends during the Asian and European session. Okay, it's a 24-hour instrument. You need 24 hours on there to understand how that trend is behaving. Does that make sense? You can't just cut to those US sessions. It just doesn't work. ZS on the daily. Let's go on the daily. I need to finish this 5 days blind. Here we go. Let's go long term. So let's go back, see where we are. In fact, I like to go back 2 years. Let me just. I just want to go back. Let's go back. Okay, sorry, just wanted to go through there. I just want to see what the longer term trend is from these highs here. Yeah. Pretty flat. I don't like it on the daily. I think I'd rather look on intraday for trades. Let me just look at the data series here. I want to go 90 days. Silver. Okay, the arrows are to help you with that fourth wave, and they're to do with the stochastic. Okay, so you've gone a certain percentage over the stochastic. So I'm just going to isolate there. Yeah, quite choppy at the moment. We've got a double bottom here. I would see if this trend actually starts to formulate on silver here. You got a really strong support level intraday here. Really strong support level. I would see how this trend develops. You see how we got the false breakout dots on the top there? I would just give this chance to develop. It's already tried to break this pivot. Give it some time. If it comes back up to this pivot 880, that's probably, you know, that's the probably good start of the trend there. Okay, so let's look at YM. Futures. Okay, sorry, I'm on the bits. Some great trades today, guys. Those trade the fifth users. You could have got. I mean, I'm not trading this week. I'm taking time off. But there was great bits breakout trades today on YM. Huge moves, massive ticks. Let's go. Sorry, let's go to Elliott Wave. YM. Okay. Okay, yeah. Again, we've got a parabolic move during the session there. So, you know, this is always going to be a bit fudgy now. I mean, that is parabolic. It's not a trend, Rick. Okay, it's just a massive trend. So you've done right, and you've gone to the 15 minutes. Okay, and these lows here. So yeah, if you're trading this off the 15-minute Friday tomorrow, don't trade Fridays. Always low volume, especially during August. 15-minute, these are lows you're looking at, yes. 1, 2, 3, and now you've got a potential pullback, okay? You've got Friday coming, you've got Labor Day on Monday, okay? So you've got to be careful. It's going to be low volume tomorrow, low volume, yeah? So I'd be very, very careful on trading this. But if this was a normal trading day, you're on a 15-minute, you would look for that pullback into that zone. We've got strong false breakout dots on the top there. The oscillator's pulling back really nicely. It just needs a little bit more juice to get going down there. But you know, could pull back. So guys, lots of stuff coming through, so I'm just trying to get through as much as I can. Euro. Okay, let's have a look at, we haven't done much Forex, so let's go to the Euro, US dollar. To be honest guys, just recently I trade the currency futures more than, I don't trade Forex anymore. I trade currency futures. Okay. I trade currency futures using our bits indicator. Let me just isolate these here. And this is a 60-minute chart. Let me go to 15. I mean, the euro and the GBP at the moment, because of Brexit and everything, it's just something I really do stay away, and I only play the breakouts more than anything. Quite a downward trend just recently. I've had a little fifth wave move on there. Was that yesterday? That was a nice little move there yesterday. But when you look at the futures, if you go on 6E for euro, we get some amazing breakouts with these guys. Honestly, they're just huge. So look, I mean, this is the bits indicator. The greens are the short entries down here, stop loss above it there. But this found this move down here. If you didn't get it the second time, the third, the fourth entry, the fifth entry, the sixth entry, the seventh, eighth entry, there were so many entries there to get that short on the 5-minute on 6E, which is the euro futures, and I prefer trading that on the breakouts rather than trading the actual Forex pairs. To be honest, it's just my personal preference. It's easier for me to do that. Just one of those things. Let's have a look at euro US dollar on a daily, actually, because I really, you know, we need Brexit and tariffs over. Wouldn't that be a nice thing to have? Yeah, it's very corrective on the daily. Awful, awful. 30-minute. Yeah. There's some nice moves on 30 minutes, 15 minutes for the Forex pairs there. There's training with the bits as well, yeah. The training with the bits is on the Globex. There's an actual, I've pre-recorded, and I've actually been given some really good praise. It's a 30-minute boot camp. The letters are corrections, so they're ABC corrections. We don't trade them, but you just need to understand it's in a corrective pattern at that time and not in a trend. And you'll see them appear more when you're trading on the shorter time frames. Let me go back to the YM on the 5 minutes. No problem at all. Isolate down here. Okay, so this is YM on the 5 minute right now. So I've isolated at a different place here, guys. Instead of isolating here, I've isolated at yesterday's lows because we talked about this 15-minute and that low there. So we've had the 1, the 2, the 3, and then we're still waiting for that wave 4 on the 5 minutes. So you just got to be a little bit patient, okay? And that's the name of the game with this. You've got to be patient. Okay, so I've just been given a 5-minute warning, guys. Have you got any more questions? Have you got the link? We will only do the lifetime license for the next 24 hours. You purchase it, you send your machine ID once you receive the software, you put the forever in your email, and Damien will give you a lifetime license. We will not give any more lifetime licenses after this month. It's gone forever. Okay, and this, you will get all future updates. So when we look at, for example, AIG, we are automating the 535 version 4. 535 is being automated, the measurement. We're producing the 5th wave target zone, not just in price but in time as well, to help options traders. Mark, I do teach this a lot. We look for recent lows and highs, and it is pretty obvious where a trend is. And again, the boot camp that comes with the Elliott Wave goes through what I talked about again today, where you look for those lows, and then we isolate and we look here, and this is where the wave 4 is right now. This is a trend. We can see the trend. We've had a 1, a 2, 3, 4. Without the numbers, we can see that's the low point. That's where we isolate. We can see then the software does its work. Antoine, you need to go to the link that's just above here. Go and purchase. Then when you purchase, you'll get an automated email that comes to you with the indicator suite. It asks you then to reply to that email with your machine ID. When you do that, put the forever in your email. Say, hi Damien, here's my machine ID. I purchased it through the webinar last night. The code forever gives me lifetime license. He's already aware, so when he receives those emails over the next 24 hours, he will give you a lifetime license on your machine ID, and that includes all future updates and everything like that. And if you change your bias or whatever and you need a new machine ID, we'll get that sorted out for you as well. Okay? You're welcome, Jean, and thank you all for coming today. I'm hopefully going to be doing another one before Christmas, talking about the bits indicator. The breakout strategy that we have. So if there's nothing else, I'm going to hand it back over to Tiffany.
If you find value in these events, we hope you will attend them on a regular basis. We would like to remind you the information provided in this was of Trade the Fifth and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spend with us. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader ecosystem. And thank you again, Paul.